looking nice and happy. It's good to see Ankur from from the RBI, of course, and we'll have the policy for you in the next 10 minutes. Of course, we'll have the governor speaking, so we'll get a perspective on what will likely play out. But joining us is Upasana Chachra, who's the chief India economist at Morgan Stanley, joining us this morning. Upasana, let me open it up first off. Firstly, great having you. Wishing you a very good morning. What are your expectations from this budget, and what, in terms of commentary, are you looking to hear from the governor?
Thank you and good morning. So I think from the RBI policy perspective, it's been sort of summarized. We are not expecting any movement on the rates. So status quo on rates, but surely some action to continue on the liquidity side. And to be sure, RBI has been pretty proactively managing the liquidity situation through multiple tools of earlier CRR cut and then OMOs and FX swaps. And I think to tide over this fiscal year-end liquidity pressures in specific, these sort of measures may continue. There could be a preference to rely over VRRs as well to tide over the short-term liquidity frictions that may arise because of year-end fiscal year-end liquidity pressures. And beyond that, I think for fiscal 27 as well, probably as we go into it, we may continue to see liquidity measures being taken up by RBI to support the transmission that's already in place, and also probably more action on the regulatory front as well. Some of it we are aware, the easing regulations that that have already been announced, but probably some more could come through in today's policy. We'll wait and watch for that.
Okay, and Upasana, hi morning. Also talk to us about what do you think the tone or the tonality, the commentary rather, is going to be on the recent developments that we've seen with the rupee, the trade deals that have been signed. Do you believe that they're going to be having any mention in the governor's speech, especially the rupee and the movement that we've seen there?
So I think with the US-India trade deal getting announced, that does reduce a lot of the uncertainty or overhang that has been there from a growth outlook perspective, and that has also been keeping the investor sentiment, especially the foreign investor sentiment, bearish, which had implications on flows and therefore rupee. So I think we have seen that reprieve in the rupee after the announcement earlier this week, and to the extent I think from an RBI perspective that is something that they will probably take into account when looking at the 12-month ahead growth outlook and therefore implications on the BOP as well. I think from a currency side, probably, RBI has been quite clear that they want to manage only the volatility and remove sharp moves. And to the extent now the recent moves in the rupee in the last few days have been more supportive, I think RBI is unlikely to, make a big mention from a currency perspective per se in this policy, given a lot of the currency movements are managed by RBI and it's not really the MPC who has to come and talk about it.
And Upasana, therefore, what we continue to see is a benign rate cycle, a larger focus with regard to growth. Growth likely, in your opinion, to surprise on the upside, the expectation of the government that a 7%-ish kind of growth rate on the kind of base we've done, at least as part of the economic policy which came out prior to the budget. Do you believe that that's achievable?
So I think for now, I wouldn't say that I'm looking at more upside to like a 7% handle number that the economic survey is indicating from a potential growth, or their range of 6.8 to 7.2 for fiscal 27. RBI's numbers, at least for the next first two quarters of next fiscal, are also in a range of 6.8. I think the overall stance, though, of policymakers, both the government and the RBI, is very supportive of growth, especially if you look at the pipeline of stimulus, both from the fiscal side, the budget that was released in terms of the capex spending, the tax holiday for data centers, which should improve the investor sentiment and flows eventually. And from the RBI side as well, the easing across rates, liquidity, regulations, all of that is very supportive of growth. So I think the domestic side of the equation definitely should sustain growth close to the targets of the government at about 7%. It is the uncertainty always from the external side in the current scenario, from what happens to geopolitics to external demand, which can, move these numbers versus the base case estimates. So I think but in context of a relative performance for India, a number which is close to 6.8 or 7 will be, one of the fastest growing large economies still.
So, Upasana, while all looks good right now in terms of where the inflation is, where the growth estimates are, do you believe that the stance of the RBI this time around will continue to be neutral like they had maintained last time, or any chance now towards a tilt to accommodative?
I would say that the stance would remain neutral. I don't think there's a need to change the stance or the tone of the policy either ways, because a lot of data points related to growth and inflation are moving in line with their estimates. We will also have the new CPI series and the new GDP series, and we should wait and watch for what that means from numbers over the next few quarters. But having said that, I think what we are seeing in terms of high frequency growth or CPI numbers in the recent past, they're all pretty much in line with RBI's numbers. So I don't really see there's a need to change the stance towards accommodative, especially at the moment.
I have two questions and I'll wrap it into one because I have limited time. In terms of the rupee, do you believe that a lot of this is sentimental and a lot of the pain is now behind us largely? And point number two, I wonder what you make of the rate differential between the repo and the 10-year bond yield, which has now significantly gone up in terms of the absolute bond yield. I wonder what you make of that.
Sure. So I think on the rupee, firstly, the lack of the India-US trade deal, along with the low nominal growth environment in the last year, definitely weighed on the sentiment and also the flows. And if we see from a BOP perspective, the pain has been on the FI equity outflows driven by that. So pretty relentless equity outflows, which have meant that even a smaller current account deficit has not been funded completely, and we've seen like a BOP in deficit for calendar year 25 as well. And that has been what has been weighing on the rupee. I think the underperformance in the rupee reflects that. With the trade deal coming through, and I think high frequency data reflecting an improvement, I think both of those factors are getting addressed. So yes, in my view, probably the worst from a sentiment and flows and rupee perspective should be behind us. Having said that, we know RBI has a net short dollar forward book position, and therefore that could cap the gains on the rupee move. And very quickly on your second one, which is the gap between repo and 10-year, or I think the steepening of the yield curve as well. I think, of course, it's also a pretty global phenomena. You've seen the yield curve steepen across economies, where there have been, increasing term premium that is now been sort of getting priced in. It's similar in India, and of course, we know that the demand-supply imbalance also exists with respect to the issuances. If we take into account both the government at the center and the states and their issuances, which are up this year almost 6% on gross basis, and next year again will be up on a fiscal year basis. So I think that remains a challenge. I don't think that the gap between this is going to narrow very quickly. But at the same time, again on the yields, I would say probably from a 10-year perspective,